You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Have you ever felt like the world's news cycle is just moving at warp speed?
Oh, absolutely. Relentless.
Leaving you scrambling, really, to figure out what truly matters amidst all the headlines?
It's easy to get lost in the noise.
Well, today we're cutting through that. We're embarking on a crucial deep dive. Think of it as a market briefing that pulls back the curtain on some of the biggest forces shaping our world right now.
Yeah, and the sources we're looking at paint a pretty complex picture. They
really do. We're talking geopolitical tensions, everything from Eastern European airspace violations, escalating Middle East conflicts.
And then woven into that, major tariff discussions.
Exactly. And their immediate ripple effects across global currencies, vital commodities. It's all connected. So our mission for you today is clear. We're going to unpack these developments. We'll connect the seemingly disparate dots so you can understand not just what is happening, but crucially why it matters, hopefully providing some clarity amidst the chaos.
And what we'll truly explore today is just how quickly events in one region, even something like an airspace breach, can send these profound tremors right through global markets.
Yeah.
It affects everything.
Everything from oil prices to
strength of your investments to currency values. It's really a testament to how interconnected our world is.
Definitely.
And we'll help you try and see the broader patterns within these, well, often quite alarming events.
Okay, let's unpack this then. Let's start with a story that really has everyone holding their breath. The day's biggest geopolitical flashpoint, the one carrying immediate tangible risk, is coming out of Eastern Europe.
The Polish Airspace Incident.
Yeah, an unprecedented violation of Polish airspace. Russian drones during attacks on Ukraine. Just think about that for a second. Russian military assets crossing a NATO border.
It's a serious escalation.
And our sources indicate Polish forces reacted swiftly. They shot down several of these drones.
And the response wasn't minor either.
It's not at all. Closing Warsaw and Rzeszow airports for security reasons. Activating territorial defense forces. This isn't just some minor skirmish.
No.
Prime Minister Tusk confirmed Poland has formally requested NATO consultations under Article 4.
Which is a big step in itself.
It is. Though he also took a careful diplomatic line, stressing the country is not in a state of war, and the situation appears to be under control.
A delicate balance there.
Very. From your perspective, how do we read that? Is it strategic calming, or does it genuinely temper the market alarm?
Well, that's a crucial distinction, isn't it?
Yeah.
It speaks to the careful navigation needed in these crises.
Right.
While Tusk's statement aims to prevent panic, signal a measured response, the very act of invoking Article 4, even just for consultations, that signals a significant shift. And what really stands out here is that NATO officials have indicated this drone incursion was intentional.
Intentional, not just drift.
Exactly. At least 6 to 10 drones entering Polish airspace. The North Atlantic Council is set to meet today to discuss next steps. That meeting alone is a marker of heightened alert.
And for markets?
Well, for global markets, this has already added a, quote, significant risk premium. It's like a direct tax on stability. And it's been supportive of safe haven demand. The key insight here, I think, isn't just about the immediate market jitters.
Okay.
It signals a really profound reevaluation of systemic risk in European investment portfolios. It forces a fundamental repricing of regional stability.
Shifting capital.
Right. Shifting capital from growth assets towards more defensive plays, likely for the foreseeable future. It's the tangible cost of being close to conflict, forcing investors to rethink their entire risk framework for the continent.
That reframing of systemic risk, that's a powerful takeaway. The situation in Eastern Europe clearly amplifies global anxieties, reminds us how fragile stability can be.
Definitely.
But as if one geopolitical powder keg wasn't enough to track, our sources then pull us eastward. to the Middle East, where a different but equally volatile drama is unfolding. It intertwines conflict with these really fragile attempts at de-escalation.
Right. The Israeli strike in Doha.
Exactly. Israel's strike on Hamas officials there, an operation that certainly sent ripples through diplomatic channels. The specifics indicate the strike killed several Hamas members, but it, quote, failed to eliminate the group's senior leadership.
Which is a key detail.
It is, and unsurprisingly, Hamas publicly vowed its demands for a ceasefire remain unchanged. No softening of their stance.
Predictable, perhaps.
Diplomatically, the fallout was swift, sharp. Qatar condemned the attack as treachery. Algeria called for an emergency UN Security Council meeting. So broad international concern. It's incredibly delicate. Every move is scrutinized.
And if we connect this to the bigger picture, the U.S. stance here is particularly interesting. It highlights that intricate web of alliances and priorities. President Trump clarified the strike was not a U.S. decision, emphasizing that, quote, unilateral bombings inside a U.S. ally do not serve Washington's goals.
A bit of distancing there.
Exactly. That statement itself underlines the complex diplomatic tightrope walk in the region, where even allies can act in ways that complicate broader strategic goals.
But amidst all this tension, there was a glimmer of hope.
Well, a glimmer, yes. Something worth highlighting. The IAEA and Iran have reportedly agreed on practical steps to resume nuclear inspections.
Okay, that sounds positive.
It's described as an important step toward de-escalation. A potential off-ramp, maybe.
But always a but.
Always. To temper that optimism, Tehran immediately issued a warning, stating that hostile actions could reverse its commitments.
So fragility is the word?
Extreme fragility. It's a stark reminder that even in the most volatile regions, the pursuit of de-escalation, however fleeting it might be, persists. You could almost compare it to a high-stakes poker game. Every player wants to win. Elusive equilibrium in a region often defined by, well, zero-sum calculations.
It truly is a high-stakes game, and as we grapple with these regional flashpoints, it's so crucial to understand how their shadows extend, right, into the very arteries of global commerce.
Absolutely.
Because while politicians navigate these tense diplomatic waters, another battlefront is opening up: the war of tariffs.
Trade becoming a weapon.
Let's pivot to that. How are these geopolitical chess moves directly shaping trade policy, and what does that mean for global economic stability? We've seen some pretty significant headlines about tariffs.
Yeah, the Trump administration's push.
Specifically, President Trump reportedly urging the EU to impose 100% tariffs on China and India.
Wow, 100%.
As a way to get this pressure Moscow to end the war in Ukraine. That's a truly bold strategy, isn't it? Linking trade directly to geopolitical leverage like that.
It absolutely is, and it fundamentally redefines the role of trade in international relations.
How do you mean?
Well, the core insight here isn't just about traditional protectionism, correcting trade imbalances.
Right.
It's a bold demonstration of how global powers are increasingly blurring the lines between economic policy and geopolitical leverage. We're seeing tariffs weaponized, not just for economic gain, but as direct instruments of foreign policy, fundamentally reshaping global supply chains, international alliances based on political alignment.
And Washington is committed.
Seems so. Washington has pledged to mirror any such European measures. That indicates a strong, coordinated commitment to this approach. It signals a new era, perhaps, where economic partnerships are deeply conditional on geopolitical stances.
And domestically, is there backing for this?
Well, there's another crucial development. The U.S. Supreme Court has agreed to fast-track the administration's appeal over rulings that invalidated parts of Trump's earlier tariff regime.
Oh, okay.
And Treasury Secretary Bessent has already expressed confidence that the tariffs will ultimately be upheld.
If that happens.
It would certainly solidify the administration's legal and economic firepower in pursuing these quite aggressive objectives.
So we're talking about a potentially significant recalibration of global trade, making it a much more direct tool in geopolitical struggle.
Essentially, yes.
But, it's not all about escalating trade wars. It's important to acknowledge the contrasting notes, too, right? The complexity.
Always important. What are you thinking of?
For instance, trade negotiations between the U.S. and India, they seem to be continuing to advance.
Ah, yes, that's a good point.
Both sides are signaling confidence that an agreement will be reached soon. It just goes to show you. while some doors might be closing or getting challenged by tariffs.
Others are still open for business.
Exactly. Pursuing more traditional, maybe mutually beneficial agreements, it's a nuanced landscape, to say the least.
That nuance is absolutely key. It shows that even if the broader strategy involves weaponizing trade, there are still parallel tracks, building and strengthening economic ties where strategic interests align.
Okay, so with all these moving pieces, we've got drones sparking NATO alerts, delicate Middle East de-escalation attempts, this big push for sweeping tariffs. How are global markets actually reacting?
Right, where the rubber meets the road.
This is where we see the immediate impact potentially on your portfolios, the broader economy. Let's turn to currencies first. The FX markets.
Okay.
The dollar is slightly softer today after Tuesday's rebound. Investors clearly seem to be waiting.
Holding their breath for U.S. data.
Exactly, waiting for that data to guide their next moves. The euro, though, different story. It slipped below the 1.1 sem level.
Yeah, feeling the pressure.
Amid the Polish security incident and that renewed geopolitical tension. For an investor watching the fine print, is this just a knee-jerk geographical reaction, or does it signal something deeper, like more fundamental erosion of confidence in the Eurozone's stability?
That's precisely the question you need to ask.
Yep.
An immediate dip due to proximity? That's understandable. But the sustained pressure on the euro suggests investors are pricing in more than just short-term jitters. They're assessing the potential for prolonged instability to hit economic growth, energy security.
Even political cohesion?
Even political cohesion within the Eurozone. This isn't just about headlines. It speaks to the underlying resilience of the currency bloc facing these huge external shocks.
Okay. What about other currencies?
Well, the yen remains firm. Markets are digesting reports suggesting the Bank of Japan still sees some chance of hiking rates before year-end.
Even with political uncertainty?
Apparently so. Some officials even viewing October as a possible window. That's a significant signal, suggesting potential divergence in monetary policy. Adds another layer of complexity.
All right, sterling.
Sterling's holding near 1.35. Attention there is shifting to UK fiscal policy. Prime Minister Starmer's budget board is starting weekly meetings.
Coordinating pro-growth measures.
Right, ahead of the November 26 budget. So domestic focus on stimulus, trying to bolster the economy against these global headwinds.
And the Aussie and Kiwi dollars.
The Antipodeans, yeah, they're holding an upward bias, helped by a firmer PBoC fix from China. But
another but?
Gains remain capped. China's latest CPI confirmed deflationary pressures are still there. So this really raises an important question for you, the listener. How do these individual currency movements reflect the underlying economic and political pressures in each region?
And what do they signal about capital flows?
Exactly. How might they signal broader shifts in global capital flows? Each shift tells a story about confidence, central bank policy, perceived risks. It's a lot to track.
It really is. And as we consider these currency narratives, commodities often act as that most direct barometer of global anxiety, don't they?
Absolutely.
Very sensitive. We're seeing a very clear reaction to this heightened geopolitical backdrop. Crude oil is higher.
Directly supported by the Polish incident, NATO talks, Middle East tensions.
It's a very direct link. Security concerns, potential supply disruptions, almost immediate.
Yeah, the increase in crude prices reflects a fear premium being baked right into the market. It's not just about current supply. It's the perceived risk to future supply from these volatile regions.
And gold.
Gold has also rebounded after yesterday's pullback. It's trading near fresh record highs as that safe haven demand rises again.
So a flight to safety.
Well, yes, but maybe something more. This gold movement isn't just a simple flight to safety. It could be seen as a recalibration of how sophisticated investors are pricing global systemic risk.
Okay, explain that a bit.
It suggests maybe a deeper erosion of confidence in traditional hedges, where the safe haven is less about yield and more about absolute preservation of capital in an increasingly unpredictable world.
So for our listeners...
For a truly informed listener, this means maybe reassessing not just what assets you hold, but why you hold them in this kind of volatile environment.
Got it. And copper, often that bellwether for economic health.
Right. Copper's edging higher, kind of in line with the broader risk tone. But gains are modest. Traders seem to be waiting for that U.S. data
to get a clearer picture of underlying demand. Which brings us back to the data. So speaking of that U.S. data, keep a very close eye on today's U.S. PPI release, Producer Price Index.
And tomorrow's CPI, Consumer Price Index.
These are going to be critical.
Indeed. These will be the next catalysts on dollar direction and rate expectations. If we connect this back to the bigger picture for you.
Yeah.
These numbers give us critical insights into inflation, central bank policy, and ultimately the cost of goods and services you interact with every single day. They paint a vital picture of domestic economic health.
Which, when you combine it with all these geopolitical events...
Exactly. It gives us a more comprehensive sense of market direction and the forces shaping your financial world.
Wow, what a session we've covered. It's a lot.
It is a lot.
From Russian drones over Poland sparking urgent NATO consultations.
To Israel strikes and Iran's tentative nuclear talks.
And then President Trump's bold push for those sweeping tariffs on China and India. It's just unequivocally clear that geopolitical risks are absolutely front and center again, actively shaping market sentiment, economic realities.
No doubt about it.
It's a powerful, almost tangible reminder that these seemingly disparate events across the globe are truly deeply interconnected.
And as we wrap up this deep dive, just consider how truly intertwined that political chessboard and the financial markets have become.
They really are.
Even a single drone in one airspace can send ripples through global economies and fundamentally shift investment strategies. It's this continuous dynamic interplay. It demands constant vigilance and nuanced understanding.
So a final thought for our listeners to mull over.
Yeah, perhaps this. Given everything we've discussed, how might the upcoming economic data, like the U.S. PPI and CPI we just mentioned, how might that further complicate or maybe clarify our understanding of global stability, especially when these geopolitical factors are proving to be so volatile, so unpredictable?
Something to definitely keep an eye on.
Absolutely. And maybe something to prompt a reevaluation of your own strategic thinking in these quite turbulent times.
Yep. Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.